Hello and welcome to Apex Trades. This is a new segment we're going to call this TA in 10 minutes or less, where we look each day at concepts and ideas that may play out, try to give an idea on where I think a potential entry would look good, where maybe an exit would look good. We'll put some confluence to that with things like bookmap, and then we see how it plays out, and then we'll maybe try to review it on a day-by-day basis. But it needs to be done quite quick and sharply, so we're going to dive in. Let's start with the macro environment. Just a couple of things to be mindful of. I'm going to add on actually the RSI because there's some really nasty bearish divergence occurring on the 4-hour time frame. So we're on the 4-hour time frame. I'm just going to show you quickly this bearish divergence. I think you can tell and agree that over the past few days we've been heading to the upside, yet on the RSI and the MFI we've been heading down. Same for the RSI as well. Let me just delete that. That was a bit of a mistake. You can see same idea, we're going down on the RSI. This is a very bearish signal, so let's just delete that and let's delete that. So what that tells us is be careful doing any kind of ideas on a long, simply because that's quite a telling sign. And okay, it's been developing over the past, since the 13th, maybe the 14th, 15th, 16th, where we've been moving up in price, but we've been moving down with the MFI and the RSI. However, it can play out as and when. Now, there is some other things to be mindful of. We've also got, where is it? Let me just do a quick search for the CME gap BTC 1. Now, this is a CME gap. Obviously, this isn't really going to come into play. Well, it actually comes into play today. Now, the idea is that where do we think this? Usually, we like to fill these gaps. Okay, you can go back in time. If we go to, like, I don't know, maybe you go on the daily. You can see whenever we have a gap, like we have a gap up here, still not filled. So there's an idea that can we come up and close this gap? The gap being closed meaning that the price has to come back up and fill this area. For anyone who missed out, because obviously CMEs don't trade 24/7, they trade during specific time frames. So if the futures and spot have been trading whilst the CME is being closed, then that's going to create that gap, isn't it? So you've always got to be mindful that that gap can get closed. And right now we are looking like we've got a delta of about $1,000 between 20k or 19.5k. Actually, if we just take it to the wick, just shy of 20k and 20,685. So there's a gap there that will need to be closed. So just be mindful. It's another bearish indicator, in my opinion, that we could be looking to head down. And you take, right now on the daily, we're so overbought in overbought territory. It's unreal. So something to also be mindful of. Back to now we're going to go to the 15 minutes. So based on this idea, for me it is okay. Well, theoretically we'd only be looking for short positions in this plan. So let me just create some space. Let me get rid of that. So I would say like this. Right now we've got a couple of good areas of confluence. We've got an order block here and another order block here. We've also got some liquidity up at the recent high here, which still hasn't been claimed around that 21,550 mark. So I think a good idea, at least for short term, would be to maybe place some sort of a short order here. So you want to get value. You don't just, for me personally, you don't want to just dive in with an order right now, because markets have a way of coming back and getting you out. But what I would say is you could look for an entry somewhere in this order block, maybe the midway point, maybe the top. Grab this liquidity. Apologies. Grab this liquidity here. Maybe DCAing another entry here, so maybe you could do like a 10 or 20% and another kind of 10 or 20% here, or maybe do 10 here and a 20% allocation, whatever your allocation is in terms of this this bid. And then the idea being that if it comes to this area, maybe it just comes and tests. We have been looking at lower lows, lower highs rather. Okay, this was a slight we've kind of breached this area, but realistically this, if I look on a more macro scale, if I go back to the 4-hour, we are in this channel right here, which you can see is formed all the way back here. which is being pretty much respected at these 2 points. So we did see a small breach over here. However, just being mindful that, you know, as far as I can tell, we're looking at like we are printing lower highs. So based on that narrative, as I say, I'm looking at an entry potentially looking at here and another entry here with a stop loss at 21,700. That reason for that being is that if it determines that it needs to come up, we've got some news events today, we've got some earnings taking place, so realistically we can see some volatility. So what I'm hoping may happen is that the overall narrative needs to come down to realize that, you know, again, I'll show you this idea of where we are from a an Elliott wave theory, but in reality we should start to see that we started printing a wave 4 or coming back to retrace, and we'll look at that in just a second. But I think potentially looking at getting an order in here, looking at maybe getting a second order in here, and then maybe having a stop loss at your 21,700 just to give you some wiggle room if it decides that it wants to come up, grab some liquidity here above its recent high before making another move to the downside. Now the other thing I'm just being mindful of is, again, if I go to the 12-hour, how long has this been running? Hopefully not too long, we've still got time. I'd want to do these in 10 minutes or less to not lose too much by way of boredom. Right, so we can see we've got our Elliott wave starting here. So for wave 1, we've got 5 structures within wave 1. We've got our corrective wave for wave 2. Wave 2 could also be at this point, just depends, but realistically it still looks like a corrective pattern. And then we have this big enormous pump to the upside, which would be wave 3, and now we're starting to kind of pause and take refuge. So realistically, what would a wave 4 look like? Well, if you were looking at a wave 4, you would take your second point of your third wave, and then you would look at where retracement levels are. So you see, you know, we're right at a liquidity point at the 236, which is at 20,279. We've then got the 382 at 19,500, virtually thereabouts, also right on point with a fair value gap, same as with the 236, also at a fair value gap. Realistically, what you'd like to see is a come back to the 0.5, which is all the way down to 18.638. Now, this would not be a bearish move, realistically. It would actually be a healthy move if the move wants to continue to the upside. But we do need to see some sort of a retracement, which is why I think in the short term, we can at least anticipate maybe some sort of a TP around the 20,250. Incidentally, if we just head over to Bookmap real quick, you'll see on Bookmap, we have down at that area, we have you can see that's that 20,250. We've got 822 Bitcoin, and that's been in right the way through. So there's a lot of confluence in and around that area, which makes me think that would be a nice area for a retracement, and the market makers want to push price down to come and collect some of that liquidity. Maybe you want to set your TP just slightly higher than that, just so that it doesn't act as an absorption and you get filled. But as I say, there's something there that I think could be quite easily to play out for today. I want to keep this one nice and sharp and neat and tidy. So that being said, I will leave this one here, and I will catch you guys in a future session, maybe tomorrow. Well, actually, hopefully tomorrow. That would be the plan. So peace out, and I will see you guys soon. Bye for now.